Hey, I made it. So welcome, folks. I'm glad to see all you guys here today. Let me know if you can hear me okay. Please just give me a thumbs up for that. Please, so I know you're here. So what happened this week? If you're a loan officer, let me know. Put up a dollar sign up there. If you guys are a loan officer, if you're a realtor, put a house. If you're a customer, just put a smiley face if you want. I'm trying to figure out who I'm talking to. So let's go out there and let's assume we're talking to our clients right now. Okay, so here's what we want to explain to them, kind of, what's going on. If you're watching this channel, my whole goal here is, my slogan, what the heck's going on with those and the whys behind it. So let's dive into what happened this week. Mortgage rates, believe it or not, they're up an eighth. The other markets are just crumbling right now. And I've been trying to say over the last few weeks, guys, if you're getting a little greedy, a lot of you got greedy on those mortgage rates and just wanted just a little bit lower in rates. I got a lot of those texting me right now. I reached out to 25 of you today. And if you signed up for my RateWatch tool, please answer your phone, check your emails. I reached out to 25 people so far today who signed up for the RateWatch tool. What this is, it allows you, if you're a consumer out there, you're a homeowner, let me know what interest rate you want to refinance, and we'll let you know when that rate hits there. So what happened this week? Okay, well, I was wrong. I put a video out this morning saying, folks, I was wrong. Here's what I thought would happen. I thought everybody was jockeying for positions on Tuesday's elections, and then we got them. And then I figured, well, from there, all the kind of the pissing match would be over. And then the government would kind of get a resolution coming up here soon. Well, that might not be the case. I think they're both digging in. They're going to dig in pretty tight. So what are mortgage rates going to go on? So we don't have any data. We did have some trickles of data coming in this week, and that's what really threw the market on its ear. So let's get over to what the markets look at. Okay, so first off, if you're new to my channel, thanks for joining. Okay, on Fridays, I try to come in here in the afternoon and kind of give you a recap of what happened during the week and the whys, and then what we're looking at for next week. Well, unfortunately, next week, there's no really economic data from the government that we could get. We were supposed to get like jobs reports and things like that. The only thing we're getting is a little bit of data kind of filling in these gaps over here. But the big piece of the news was the employment numbers this week, and they were all over the map. Did you see the numbers? I'm going to show you what I found this week. So if you're watching this channel, here's what we watch to figure out what's going on with mortgage rates. We watch this right here. This is a mortgage bond. Okay, this is the only piece I'm going to tell you how you figure this out. If the mortgage bond over there, if the price is going up, that means rates are getting a little bit better. Okay, the bigger the number, well, the bigger the drop in rates. Here's what we saw over the last 2 days. So we were down here, what is this, at 99.4? And now we're at 99.57. So we're up about 20 ticks. And so mortgage rates should be basically steady or coming down just a little bit. It also depends on what rate you look at. So the first thing I want to talk to you out there is, especially if you're a loan officer or a realtor, how do you explain to your clients what are rates today? Okay, so if they do a scan in the market, and you might be a homeowner right now looking to refinance or looking to buy, tracking this stuff, you might say, okay, Dan, every day you come in here and here's the rates and we track this. So that's in essence the 30-year fixed rate. Well, not necessarily. This is Mortgage News Daily. This is what we follow. It's just a nice, simple format. And here's what they come up with. They come up with this, but the data is this. They send out notices to banks all over the country, and they ask them these questions. If you had to borrow with this criteria, these people have a 780 credit score. They're putting down 25%. They're buying a single family home, and they're going to live there. Okay, all the pieces of that component fit, and that's their rate. Okay, but that's their rate. Other ones come up like this. If you ever do a scan, today, right now, one of the rates we found was 6.22. Let me scan in on that a little bit. 6.22, 30-year fixed rate. That is Freddie Mac. Okay, then you come down here, and bank rates publishing 6.26. But if you go to Zillow's publishing 5.99. Why? It's all marketing, folks. You have to dive into it. Please make sure you look at or read the fine print when you're going into these things. So this is where the rates were for this week, or we're ending for today. So we have the 30-year fixed here, the 15-year fixed here. Look at the spread there. It's pretty good. A lot of times what we're seeing behind the scenes is the 20-year terms coming in pretty close to right through here. So you might be able to refinance. If you were at a rate and you bought a house, a year or two ago, because rates were 8% at the end of 2023, this might be a position where you can actually refinance into a 15-year or 20-year and maybe get the same payment because of the rate differential, and you could save tons just tons of money. Okay, so let's get over to the pieces of the puzzle that really came in this week that kind of skewed the market. So here's what we got. Mortgage rates, they went up about an eighth, but depends on who you look at each day. But if you go over to here, here's the confusion, I guess, in the jobs market. So yesterday, ADP came out and they said, okay, the jobs report is that we're following or we're creating is showing there's about 42,000 jobs that were created in the past in October. That's pretty good, I guess. That at least isn't showing that there's a massive amount of people losing their jobs. Then we go to the next day, and then here's what actually helped rates yesterday. Challenger. This is kind of a report that comes in, Gray and Christmas report. 153,000. I'll repeat that. 153,000 job cuts announced in October. That is the worst in 22 years. And then that's why you saw mortgage rates take a dump the other day. So, but now you have the Chicago Fed that came in last night that their reports are showing, well, the unemployment rate is staying sticky at 4.3. So what is it? That's the uncertainties that we don't have. That's the uncertainties that the markets don't have. So what the markets are doing right now is they're taking it on a chin. And hopefully you heeded my advice to maybe take a little bit of those profits off the table, because there was a correction or a little correction in sight. I'll go through some of these numbers with you. This is kind of parallel to the housing market. Let me go over it and show you some things. Well, here's what the market's looking at right now. They're looking at earnings. Remember a couple weeks ago, we were looking at earnings every morning, and right above my head, it was just nothing but green everywhere. Okay, so we're starting to see some cracks in the surface. There's one over here, and I just happened to fall onto it. I got to show it to you. Look over my head right here. I don't know what this company is. If you know who QBTS is, their earnings per share are down 485%. And the stock's down 6% today. So these are the earnings coming in. I was more focused in on like McDonald's and things like that, because here's a study that just came out. People in the age of 25 to 35, that's all my kids. And they come in bitching every day. They're like, okay, Chipotle, McDonald's and Taco Bell and these other companies we used to go to for, okay, and we know the food isn't the greatest, but it's affordable. They're even pissed off at those places now. They're like, I'm not going to Taco Bell and spending, $10, $15 on a couple crappy tacos. Nothing against Taco Bell, but this is right in the realm of what my kids are talking about. They're starting to penny pinch quite a bit more than they did. So the areas that are going to get pinched is where, younger people that aren't making as much money are really going to feel the pinch. And there's a lot of them, millions and millions and millions. And that's why I come in each day to help explain to you guys all this stuff. So folks, my name is Dan Frio. I actually do this report every day. And I come in each day to help explain to you guys what's going on with mortgage rates and especially what's going on with mortgage products. Because there was an announcement today I'll get to here in a second. Fannie Mae came out and said, we're removing the restrictions on credit scores. And a lot of people might be saying that's fantastic news. I don't think it's going to be really any news at all. And I'm going to show you only one little segment that population's or that segment's going to help. But if you need some help, you're out there looking to buy a house, we're already helping those out that are looking to refinance. What do we do for those that are looking to buy? Check out this grant right here. This is a grant that you don't have to pay back. It's not a lien. There's no paybacks. The cool thing about this is, let's look at it this way. If you're needing some help with down payment assistance, and you get it. Most of them are loans. So what will happen is, let's say you buy a house for $200,000, you put down $5,000, but you get a $20,000 down payment assistance loan. So now you owe $215,000 on a $200,000 home. You can't refinance. So that's what happens when you get one of these that's a loan. So don't get it if it's a loan. Make sure it's forgivable, like one of these things. So let's go back to the earnings report. They're starting to crack. And even I'm talking to people in these age groups, and they live with me, some of them, and I'm seeing it as well. And we're eating at home more and more, and just the recreational things are starting to deplete. But let's get over to here. Here's what the market's been doing. So a lot of people are freaking right now. Here, the cool thing is I trying to get one of my sons on here to talk. Because, the cool thing about them is, hopefully I brought them up the right way, is, when I'm saying, hey, the market's crashing today, what's going on with Bitcoin? And most of them are like, I don't know. I don't even check it. That's fantastic, because the reason why most people lose in the market, you're trying to time the market. You're trying to time the market in this, you're trying to time the market in buying homes, you're trying to time the market when it comes to interest rates. That's why I created that RateWatch tool. And most people miss and they lose money as investors. Unless you're in the end, you're probably not going to make any money. But here's what the market's been doing. So if you just stuck it out and you just bought in 2020, here's what your returns would look like. Look at this. This is crazy. Look, this is as bad as housing. So in 2020, the stock exchange, the S&P, it was the overall, think of the overall markets, was up 18%. Okay. The following year, 2021. Now this is pandemic, up 28%. It's almost up 50% in 2 years. Okay. So then you go to 2022 and it's like, okay, it's down 18%. Oh, the market's crashing. It's doom and gloom. And well, you already made 50%. And then what happened since that? If you got out, and I know a lot of people did, and they're like, I'm not getting back in. The market's way too frothy. Well, in 2023, you missed out on a 26% return. 2024, a 25% return. 2025, it's not over yet. And I still think there's going to be probably pretty decent returns. So look at it overall. And this is where a lot of people come in and they're like, oh, the housing market, 2022, look at it, so worst ever, and we're going to have a repeat of that next year, and then the following year, and the following. No, folks, you can't look at it that way. Okay, so that's the stock market. So when you see in a pullback a little bit, let's go down through here so this can explain it to you. A correction typically is a 10 to 20% pullback in the markets. Anything over that is basically means it's going into a bearish market. How big are these changes? Well, right now, this is basically a 3% change that we've seen. So nothing major there. Now let's get over, and I really want to, if you guys got any questions, please ask away. I want your feedback on, hold on, I got to get rid of this one little section here. Let me know what you think. Do you think the government's going to come down out of lockdown this weekend? Because here's my thoughts on this. I want to know your thoughts down there, because this is huge news. Please share your thoughts. Just give me, you think it's going to solve? Give me a thumbs up. If you don't post anything, that means you think it's going to continue. But my thoughts were, after the Tuesday's elections, and especially the results that were received, everybody be back at the table saying, okay, look, this worked and that worked, and whatever they need to do, but they need to get back to it. Okay, I don't care what side of the aisle you're on. I mean, I'm sick and tired of just turning on the TV and the shutdown's over and they did this and they just do what you're supposed to do. Get people back to the thing. Renegotiate this healthcare stuff, or put it in writing. You'll renegotiate it because it's affecting a lot of people. But so I'll stop there. So now, what do you do if you're a homeowner sitting on the fence? Because if you're a home buyer or you're building, these rates, you're going to have to look out till next year. Okay, I'm working on my forecasts for 2026, the rates and the housing market. I gave you a little tidbit this morning on some housing markets that were up and where 2026 is looking. You realize West Virginia, since 2020, I even put my sweatshirt on today, is up 450%. Okay, Illinois is even in the top 10. So markets are doing pretty good, but people still keep pointing that 2008, it's going to repeat itself. And folks, it's not going to repeat itself. So let's get over to, should you refinance? Okay, so if you're out there, you might be a loan officer. How do you explain this to your borrowers? If you're a realtor, you might have some of your clients saying, should I refinance and then buy that other house or whatever? If you're looking to buy or build, or you're a homeowner, this is huge for you. Okay, so let's get over to here. Here's what a lot of people don't understand. You don't need a huge move in interest rates to really help save you some money. And the biggest news or reason why most people don't refinance, if you're out here watching, let me know why. If you're watching, you most likely missed the locking your rate in, so you're still tracking rates. What rate are you looking for? Okay, but let's dive into this. The reason why most people don't refinance, one, it's a pain in the ass, they think, and two, it's going to cost too much. Okay, so because when they bought that first house, and that was their only experience with housing, the fees were like $10,000, and you're sitting here saying, I'm not going to refinance to save $100 and spend $10,000. It makes no sense. Well, let's get over to it. There's a lot of times where the fees might be under sometimes $1,000. Believe it or not. Let's get over to it. Let me show you an example here. Here's a client or a person that bought a home back at the end of 2023. This is when rates kind of hit the ultimate high, the highest we've seen in Christ, since I've been doing this since 1990, and they were higher then, but over the last 20 years, I mean, we haven't seen rates even come close to this. So this person had a 7.625 rate. They took it out on a 30-year term. They actually did this in November of 2023. Okay. So they owe 392. Actually, they owed 390 like one or something like that. Let's just put the 3191. They were in there a couple of years. Okay. This one, they were shocked. They didn't need an appraisal. They had title fees and some escrow fees that came to about $3,000. So they refinanced that in the loan. We got them a 6.125 rate, and here's their savings. They're going to save. Let's go over this. Where'd it go? I just lost it. They're going to save $400 a month. But here's the thing that's tough. And here's a question that a lot of people have. And I don't really know the exact answer to it. Down through here, this is saying their recovery time is 7.6 months. I always said, especially in an environment right now, your question might be, well, Dan, we know rates are going to go down. So why would I do it now? And then next year when rates go down, do it again? I wonder if rates don't go down. Wonder if we just stay here and you just miss the complete opportunity. So you pay that higher rate for that much longer. Let's say rates go back up. Let's say the inflation ticks in, tariffs are deemed illegal, inflation jumps up, and the markets take a tank and rates jump. Okay, so you're losing out on that money. So check and see what your break-even point is. But I went over to Dave Ramsey. Now, I'm not a huge Dave Ramsey fan. Don't criticize me down below. There's things I think he says and does that are brilliant, and there's other things that he tells people there, and I smack myself in the head saying, what are you talking about? Economics 101 would show you otherwise, but whatever. I was actually watching a show the other day, and I actually grabbed the transcripts to show you this. He was going in here, and he said, and he was just bashing this guy. It was crazy. And he basically says, here's when you don't refinance. Here's when you don't refinance. Most U.S. households are sold every 6.5 years. Average mortgage lasts 5.5 years, and that is absolutely accurate. And if you don't believe me, I got Chat GPT sitting on the sidelines. Okay, so then he came through. If your break-even point on a refinance is 7 years, you probably wouldn't take it or it wouldn't be any benefit. I would never advise anybody if it's taken 7 years to recover their costs to do it because, yes, that rule up there has always been around. If you have a 7-year break, if you have a 7-year break even on a refinance, this is my word, you got screwed because on average, you're going to get there. Not going to get there that long. It's mine forever. Blah, blah, blah. So what he was saying here is the break-even point, as long as it's 2 years or less, do it. I don't know if I'm in that camp. So let me know what you think down below. This is where the ones I want loan officers out there. Consumers, if you want to chime in, yeah. Would you advise your clients if the break-even point was 2 years, are you telling your borrowers to take that? And if you are, why? I don't know why. Especially in an environment we know most likely is going to go down. But if we don't, we don't want people spending a lot of money, but we also don't want you missing out on this. So, but let's go back to this. The unique thing about this is the biggest point of this is check your fees. That's the biggest thing I want you guys to do. So here's what we do, and here's what I do. Okay, like I said, I'm actually a federally licensed mortgage loan officer. That's what I do for a living. I'm licensed in all 50 states as well as Puerto Rico. Folks, I've been doing this for decades. I got in the business 36 years ago, I want to say. And we would love to work with you. We have a slogan. Here's our slogan. This gets a little confusing. It's one application, one credit pool. We're going to shop your loan and compare your loan to over 30 different lenders. Why? How? Let's go to why. Okay, here's the reason why. Okay, here's the reason why. When you go out there and you're searching for a rate, does every website have a different rate? And you're sitting there, you're just scratching your head saying, what? Okay, so I wasn't planning on doing this, but let's do this for kicks. Let's go to and just put out 30-year mortgage rate. I'm just going to wing this. I don't know where it's taking me. But what I want to show you is when you're looking at this stuff, they're ads. They're ads. Okay, so bank rates, top of the heat. They're probably paying a fortune for this, but let's just go to bank rate. Okay, compare 30-year mortgage rates today. So here's what I think bank rate does. You have to click in there. They're going to sell all your data. So what they're going to do is you're going to put your information in here. They're going to sell it to anybody and everybody that wants to buy this data. So the people that are buying the data really don't know what you're looking for other than you hit this criteria. So that's number one. I don't know why this is so blown up, but let's see what we can do here. Skip, show me rates. Okay, so this is what you guys do. If I'm looking to put, let's go to refinances. Okay, so if you're looking to refinance, now I want you to see all these. There's going to be different ones, and you're going to fly through this. And which one would you pick? Let me know which one you'd pick. We go to this one, 5.249. Okay, 5.25, 5.25, 5.3, 5.3, 5.3. You get what I'm saying? Okay, then you have over here APR 5.5, 5.3 is a rate. This one's 5.529. So what are all these? Well, let's go down here. What this is going to do, I haven't been here before, I don't think, but I want to go over and show you how you can. This one really doesn't do it. When you plug in there, there's all kinds of different triggers. So how confusing is this? I want a 30-year fix. You're going to click this. Now, where's this taking me? I don't want to do this. I don't want to do this. Okay, so my data is going to get sold. I don't know who this is or what. Reach out to me. This is what we do. Here's what we do. Okay, you're going to put in your application one time. We're going to pull your credit one time. We are not going to sell your data. Okay, folks, I work at a bank that we do this. We're set up with, I think it's 34 different lenders right now. These are credit unions, huge mortgage companies that might even have been on that list, and banks. And I have the ability to use them. It's kind of like a brokerage. We have their products, their rates. We just facilitate the transaction as the loan officers. That's what I do. So why we did it is because our goal is when you reach out to us, the name of my show is The Rate Update. My whole goal is I need to have good rates. So this is why I do this. I've been a broker for years and years and years. I took a position at the bank to hold a federal license, and then they have this opportunity for us that we have all these products to work with. That's what we do. You don't have to go through, where was it? I don't even know the next step. I don't want to give you all that. I just want to find the rate. So, and then again, what happens here? They sell your data. So let's go back to it. All right. So if there's any questions, let's see what questions you guys got for me today. We can talk stocks, bonds, cryptocurrencies, whatever you want. Click on chat. Never miss a segment. Okay, that is us. Let's go over to here. I was given 5.375 rate for a VA loan. Is that good? Oh, let's see. Army, thank you so much. I hope you saw my show the other day. Okay. What I want you to do is send me your loan estimate. Okay. What we have here is, let me go to my website. So don't go there now, but once you're done, go to my website. And here's a loan estimate review tab right there here. Let me find that for you. Okay. Loan estimate review. So if you are in the process right now of getting a mortgage, now, let me first say this. If you're a loan officer on here, I'm not trying to steal your business. Okay. I'm not here to steal your business. We all work very hard for what we do. What I'm trying to do is keep those big companies in check that are just hosing these people, especially VA. Okay. Especially the veterans out there. So Army, if you would do me a huge favor, upload your loan estimate in here right now. And as soon as you do, send me an email and I'll make sure somebody gets on that immediately, and you'll have an email back from us within an hour going over exactly what we can do. And if they beat us and we can't compete with them, we'll be the first one to come back and say, you know what, God bless you, take it. They did a great deal for you. So I'd love you to do that. And again, here, if you're a homeowner right now, here's the RateWatch tool. All you do is you plug in your mortgage information. I don't sell the data. Okay, I monitor it here. I called already 25 people today. And just tell me what rate you want to be contacted at when rates hit there. We'll go over the numbers just like we did here. Okay. Should you refinance now? You tell me on this one. If you could save $400 a month, your break-even point would be 7 months, and you would save almost $90,000 over the life of the loan. Would it be worth it? I think so. So that's what you're seeing through there. Let me see if there's any other. Oh, here's what I want to talk with you guys about. Some breaking news on this piece of the equation. Fannie Mae, did I pull it up here? Fannie Mae just came out with, holy crap, I missed it. Hold on, folks. Fannie Mae just came out and they are now not, basically they exempted the minimum credit scores. So let's see if we can find this for you. But I don't think it's going to be good news. Okay. Or it's going to help a certain class. Let me see. Fannie Mae. Removes, there it is. Removes minimum credit scores. Okay, so here's what we're seeing in the background. Fannie Mae removes minimum credit score requirements from DU. What DU is their that's their automated system. So let me walk you behind the scenes on how the mortgage process works. I'm actually posting something next week. It just explains to people what is a mortgage, what is it, how do you get one, and because there's a lot of people who just don't understand how to do that. But Fannie Mae came in. And it was kind of shocking. Alan texted me last night. And he said, dude, you hear that breaking news that Fannie Mae just removed all of their underwriting? I could have swore I did something on this. Bear with me a second. No, I had it up, but I lost it. Okay, so let's get back to this. So what that means, they used to have a 620 credit score minimum. If you were 619, ain't getting a loan. Okay, so that hurt a lot of people. But you also have to understand how all of it works. So your interest rate, we'll go back over to here and we'll start looking at this. Your interest rate. What affects this? Okay, if you go to any of those calculators, here's the things that affect these. The first thing you're going to be asked is, what's your credit score? Okay, we need to know that because that is a huge piece of your interest rate. The worse your score, well, the worse the rate. How much money are you putting down? So the less money you put down, the higher rate, the more risk for the bank. Think of it that way. If you're lending somebody some money, the more money you give them, it's risky. Okay, so the more money we're giving you, the more risk it is. And how much money you make and what your debt ratio is and things like that. Well, what you really probably don't understand is how that affects your rate. Okay, so even on here, you see the 30-year fixed rate. At Freddie Mac, it's 6.2, bank rate at 6.26, at Zillow, it's 5.99. What yours is, I don't know. But you have to, shoot, I just lost my train of thought. My apologies. You have to understand this piece where the rates are, what your fees are, and everything else. Shoot, I just lost my train of thought. Oh, so now what you got to think of is if you go below 620 credit score, how bad are the rates going to be? So there's things out there called loan level price adjustments, and that's what I pulled up earlier. What it is it actually shows you how much of a rate increase that you get as your credit scores go down. Well, people that are looking, if to buy a house or refinance, if they have a 620 or 625 credit score, their rate's probably going to be, depending on the loan to value of the house, it could be 1% higher than those with a better credit score. And you're probably saying, yeah, it should be that way. Well, it probably should. But the problem is once you get below 620, the rate's going to be so high, it's probably getting into the area of predatory lending if there was such a thing. So that's where FHA usually pops in. If you have a credit score at 619, go FHA. Usually, as everything else is in line, you're okay. And the rate is much better than it would be at a 620 anyway. So the only area, I'm educating you realtors out there and your loan officers, the only area this is really going to help is condos. If you're looking to buy or refinance a condo with a not so stellar credit score below 620, because FHA requires the condo association to be approved. Half of them aren't. So if you live in a condo that's not FHA approved, you can't get an FHA loan. So what other loan alternatives do you have? In some cases, you don't. So you got to pay cash, or that's why a lot of people, it's like, oh, they're a cash buyer. So this is where Fannie Mae might come into play. So, but how high is that rate going to be? That's my biggest concern. So if you're buying a condo with bad credit scores, you might get some relief on this program. But otherwise, it looks more like it looks good. Let's put it that way. So that's basically what we had this week. So to summarize some things, what the Federal Reserve's looking at, they really don't have any data to figure out what's going on. So on the inflation front, they're just throwing in the towel because they're like, okay, this tariff stuff's driving us nuts and might not even be deemed legal. So let's skip past that and go right to the employment numbers. And then when you go through the employment numbers this week, when you start digging into them, well, Chicago Fed has the unemployment rate at 4.3, exactly what it is now. But then we come out with Challenger, Gray, and Christmas report, just came out yesterday. It says 153,000 job cuts in October, the worst ever in 22 years. What is it? So that's the dilemma that the markets have to face right now. And then on top of that, ADP came out on the other day and said, "Oh, the markets or the October payroll numbers looks like it's added 50,000, which would be okay." So what is it? And that's why the markets are doing exactly this. They just needed a somewhat of an excuse to get some pullback, and they are. Earnings in some areas are doing well. Did you see what's his name? Elon Musk. Did you see that pay package? Sheesh. I hate to say it, but if you're a Tesla stock holder, would you vote on his pay package? Would you agree to it? I would have to say yeah, because if he leaves, what is Tesla? He's the poster child of that company. So I think it was a prudent decision on their end. We'll see how that works out over time, how the earnings report goes. We'll continue to keep a watch on that. But the biggest thing I can just explain to you guys is when you're looking at rates, make sure you work with somebody credible, knows what they're doing, and can track these things for you. And folks, that's what we do here at the Rate Update. So let me explain one last time what we have here on the website to assist you guys if you're out there looking to buy, refinance, or just reach out to us to see what you would qualify for if maybe you're looking to buy a house in 2026. So right through here's our website. There's a bunch of tools here. The one thing right up through here, that's how you can contact us. You can ask me a question right through here, and it will be me replying. Best thing we want you to do is just schedule an appointment. It's not a hard sales. We're just going to do this. We're going to go over all your scenarios. We're going to help you on your budgeting, your credit, and everything else, and just kind of set you on your way, put you on your way, hopefully in a good path. If you're out there a homeowner looking for us to track these rates for you, hit the RateWatch tracker. If you got a quote right now you want reviewed, hit the loan estimate review. If you're a homeowner, a home buyer looking to buy, check out this right here. It's $7,000 down payment assistance that you don't have to pay back. A fantastic program. So next week, government, if it's shut down, we're going to have no data. So then the question arises, Dan, what the heck's going to go on with those and why? Well, hopefully I can answer those next Saturday or next Monday for you, but I will be posting over the weekend. There might be some special things I'll be posting out to give you an idea on where I think rates are going to go in 2026, where I think the housing market's going to go. And if you don't want to miss any of them, please subscribe over there. So every time I post a video, you get an alert. So thanks for watching today, folks. I greatly appreciate you guys joining me each day. If you would, just give me a thumbs up. This helps the channel get some more analytics behind it. And if you're out there looking to buy, refinance, we'd love to navigate you through that entire process. So my name is Dan Frio, and I'm here for the Rate Update.